Hi guys, welcome back. Sofi finally got its bank charter approved, which will now acknowledge the fact that the management, the business plan, the profitability roadmap is really well set up for Sofi for a long-term vision. That's why they got the bank charter approved. But what does it mean that the bank charter is approved? Many other fintech firms had to first require with the FDIC banks to ensure customer loans and deposits. Well, this will no longer be the case, and it won't need an intermediary to facilitate its loan offerings. This means that the company itself can offer more competitive interest rates without having to share a cut of the profits with another third party, which should have an immediate impact on overall profitability. Even before news of the charter, Sofi offered some of the most competitive rates in the market because of its asset-light model, which doesn't rely on physical infrastructure. Amid market uncertainty, Sofi could also stand to benefit from the anticipated rate hikes by the US Federal Reserve, which could see further growth in its credit and lending lines. It's still early for the company's journey. It's a high-risk, high-reward investment, guys, and I've been investing in Sofi since it was around $12 back in the days, and I'm still investing, guys. I'm still buying some more. I'm gonna buy up until around $17 to $18. That's my maximum I'm willing to pay for Sofi, but I'm looking at Sofi as a $30 stock. It's just like all the other analysts say it's a $30 stock. I truly believe Sofi is the future, especially when we compare SoFi, or Sofi as I like to call it, to traditional banking sectors, guys. When we compare them, we can see a very huge difference, guys. It's that Sofi is trying to disrupt the traditional banking sector. It operates three core units: lending, financial products, and its Galileo platform. Galileo handles payment processing and digital banking solutions through its application programming interface. Fintech companies such as Dave, Chime, Robinhood, and Revolut are using Galileo. Sofi can do it all, guys. It's like a one-stop shop, or as I like to call it, it's like a pawn shop. You can go and sell everything and buy everything, guys. Sofi operates student loans, auto loans, mortgages, refinancing, credit cards, everything. They do it all. You can even get fractional shares, specialized ETFs, robot investments, margin trading, crypto. Well, Sofi isn't yet profitable, but things are about to change very soon, because when we look at their financials, we can clearly see that for the first time they are EBITDA positive. Sofi being 37 million EBITDA positive is a great number, guys, and it's for the first time ever. Now, what does this mean, guys? Let me explain very shortly what it means. EBITDA stands for earnings before interests, taxes, depreciations, and amortization. It's a measure of a company's overall financial performance, and it's used as an alternative to net income in some circumstances. EBITDA, however, can be misleading because it strips out the cost of capital investments like property, plant, and equipment. It's basically a way to look at the operational finances of a company, and looking at it this way, Sofi is positive, so it's a great positive point. So on an operational level, Sofi is for the first time profitable. Let's look at the latest metrics that we have from Sofi. They added 377,000 new members. This is the second highest quarterly increase in their history ever, and I'm looking forward to the new numbers coming out for the first quarter of 2022, which I believe they will break another record, guys. But it's not only the members. The growth in their products department also keeps on increasing, year over year, a growth of 108%. But not only that, their Galileo account has also seen amazing growth, 80% year over year, all the way up to 89 million accounts. When we look at insider trading, we can see that SoftBank sold around 22 million shares worth $500 million, guys. There is a big reason behind this. It's not that they want out, it's because they want to reduce their share percentage in the company. Because if you've got more than 10% shares in a company, then you got a lot more paperwork to do. So it's for their own interest that they did this, guys. They would have otherwise more regulatory and disclosure requirements, a lot of headache that they just don't want to mess with. So don't be scared from the insider pressure guys selling it. Sofi is just like Apple, Neo, or Tesla. It's starting to have a cult following. Any company that's starting to get a cult following is a great company to invest in, especially if you're looking for a long-term investment. Now, looking at the share price, it's around $14, $15, $16 today. It can jump all the way up back to $24, $25, but don't count on it to be very soon, guys. It will take some time. It doesn't happen in a night's day. It will take time. I truly believe in the long term we can see $30 in Sofi's price. I will be buying more, and I hope you guys enjoyed this video. Don't forget to like and sub to the channel, and please write in the comments your thoughts, your opinions on what's happening with Sofi, and if you got a long-term vision and why, guys. I'll see you in the next one. Ciao, ciao.